Hey, welcome to the weekly social, folks. It's everything Katy, Fulshear, Richmond, Texas. Today we have a couple wonderful guests. We have Jessica Fuentes as well as Rick Chester with Brazos Insurance. Hey guys.
Hi, how are you?
Say hello.
Hi. Hey, how are you?
And we also have the lovely Denise Tomasini. I'm sorry I missed you.
Yeah. Welcome, guys. Thank you for having us and putting this together again, Richard.
Sure.
Yeah.
Thanks for tuning in. We're pushing 3,000 plus views. Greatly appreciate all the fundraising activities that you guys have done. The backpacks keep pouring in, so thank you so much. I had more people reach out to me last night stating that we have more coming.
That's
so this
awesome.
is going to be the last Friday that we're going to ask for the donations for it.
Okay.
Because school goes into session next week.
Isn't that crazy?
It is. So if we do get any after the fact of the drop off, it's not going to go to waste. We will go make a second
Drop them
delivery.
off like we did last year.
Absolutely.
We go take them to the school and drop them off, and
please keep sending. It's $14.99. It's a backpack full of supplies, and it's going to help a child get an education. So thank you so much for helping with this. So back to our guests. Hey, tell us a little bit about yourselves and your company.
My name's Rick Chester again. We're with Brazos Insurance. We've specialized in home and auto and being kind of an extension of the closing process for new buyers. Primarily over the years. I've been doing this for about 19 years. Jess,
you don't look old enough to say that. Either one of
you. Jess and I have been together for almost 15 to 16 years. I have to think more about it hard.
Okay.
So we've been working together for that long, and like I said, we're primarily in the home markets, which are getting harder and harder, obviously, to write, as you're probably seeing that with some of your buyers.
We are. There's a lot of banter and confusion out there. Can you enlighten us on kind of what's happening from the insurance side? Because the consumers go, well, my rates are going up, but they don't understand what's truly transpiring out there.
I talked to an insurance guy at my class last Friday. We're doing my license, and I won't name company names, but he was saying their company wasn't even writing insurance.
That's correct. So
that's one of the major issues right now is availability.
Okay.
Especially Harris, Fort Bend counties, so many of our carriers are shutting down, and a lot of them will say temporarily, until we can, figure things out. So they'll come in, they'll come out, and so that's kind of the game we play all day when we're doing a reshop is, okay, where's your house, and how many carriers are actually going to even offer a quote in that location. So when I speak to someone who's like, it just keeps going up, up, and up, and they kind of want, like you want, an explanation, like, can you say, tell me exactly what's going on? That's usually what I lead with. I might have had 16, 17 carriers 2 years ago to check on that one home or that one address. And competition creates lower prices.
Correct.
And so now if I have 6 or 7, I'm in a good mood. I'm like, I have a couple of options to check, and that's the tough part.
Right. Typically, the further you get away from the coast, you'll have more options.
And that's due to wind zone ratings, is that correct?
To a degree. I mean, so you've got a tier 1 county, which would be Brazoria, Galveston, and all the coastal counties.
Okay.
And then you get into like tier 2, which would be the Harris market, west, and then as you get further west, you get into Austin and those counties out there, and the market's open back up.
I see.
And so you've got another dozen.
Yesterday I did a quote in Bexar County, which is out like towards San Antonio.
Yeah.
I had so many options for that, whereas if that same home had been here in Harris County, I might have seen 3 or 4 rates, and then I would have to kind of work with those carriers to whittle down that rate to something manageable for.
Well, I just sent y'all a customer for Dallas that y'all are doing the insurance.
Yes, and so that would be like Tarrant County.
Yeah.
So you'll get some, and actually Dallas and Harris are actually kind of mirror images of each other when it comes to risk assessment. So they have a massive.
They're metropolitan areas?
More because they have a big hail problem. We have
wind down here.
issues. They have hail, so there's a lot of similarities between the two counties as far as they're kind of migrating to a 3% mandatory minimum wind hail deductible in a lot of areas for a lot of companies. So
instead of a 5.
we used to have. When I first started, we could have a $1,000 deductible on all perils and a $1,000 deductible on wind and hail, and now it's like you'll have a 1% on all perils, but you'll have a 3% minimum on wind and hail and hurricanes.
And perils means your homeowners, just on the overall, on the dwelling homeowners, not the hazard storm. The hazard.
The hazard would be the perils being fire, lightning, the different causes of loss.
Yeah.
Okay. What else are you guys seeing in our industry right now? I'm seeing home value prices going up, but I'm also seeing that when the home value goes up, the construction cost has gone up as well with inflation, and I think part of that you guys are part of as well. Yeah, am I saying that correctly? Like,
So I maybe to try to get to expand upon your point, I think what we're seeing is like a rise in replacement costs.
Replacement cost, well, and home values. I mean, if it was say a $300,000 house, and that house is now $600,000, well, you're increasing the payout back $200,000, and there's got to be an offset somewhere.
Sure. I mean, we're seeing a lot of our carriers have a minimum price per square foot to rebuild. So you'll have, what an average size home is, 2,400 to 3,000 square foot, maybe.
In our market, probably around 25. It's probably
Just call
right.
that. And so now these replacement costs are going up to $200 a square foot average. So we're insuring a 2,500 square foot house for $500,000.
Right.
So we try not to chase the market value, but I mean now we're just trying to keep that as minimal as possible because I think it's outpacing even some of the purchase prices.
Yeah, we used to have the opposite problem, whereas we wouldn't give enough coverage, and we would always have to explain the difference between market value and replacement cost. Your market value includes your land, whereas the replacement cost does not. The insurance carrier is not in the business of buying and selling your home. They're in the business of rebuilding it if it were to completely, burn down to the ground. And so in the past, that number sometimes would be, 50, 60 grand lower than what your purchase price is. But 50, 60 grand, sometimes the carriers would allow us to, just bump it up, give them a little more coverage, and, now your numbers match and the client would feel a little more comfortable. Now, with prices being so volatile, it's not the same conversation anymore. Now we're, trying to see how we can reduce our replacement cost estimator to try and reduce their premium, but it doesn't always work out that way. Like, for example, we have some carriers that have super high cost estimators where they're over 200 a foot sometimes, but their rates are lower. So, that's another game that we have to play in the insurance market is every carrier is going to have different guidelines and different built-in estimators. And so as the agent, you kind of have to know, oh, that carrier is going to do this, that carrier is going to do that. We don't want to put him there because they're going to do that to him. And then that's where you start, the resale process to try and
kind of be doing a home run.
Yeah.
exactly.
We have that conversation on a daily basis now where it's like, I know we're insuring your home for $100,000 more than you're buying it for, but this is still the best price for your area, right?
For the asset.
For the asset. As far as the insurance goes.
In a lot of consumers, they think that this is kind of like commoditized. You guys do this all day, every day. You're licensed insurance professionals. And then I'm listening to what you guys are saying. You guys are working to figure this out, let alone a consumer that's doing a renewal once a year, sifting through all this. That would be a mountain.
Yeah.
On who's paying claims, who are we having issues with paying claims maybe in this county or this area?
And those conversations are taking longer these days. When a client calls in and they're like, okay, what's going on? My rate went up, $2,000 in 1 year. Help me understand this. When you have to have that conversation with the client, it used to be a lot quicker. Hey, rates are going up, and I'll find you something better. Don't worry. Now I find myself prefacing the conversation by, don't get mad if I don't find anything better, but I'm gonna do my best, and here's what's going on and why those rates are going up. But I'm still gonna try. That's what we're here for. And I always tell people, even if your rate didn't go up a lot, call us to reshop because you don't know what rates look like everywhere else. So I like that people call us for reshops, but it is getting more difficult to find something better. Like Rick says all the time, it used to be a lot more fun because we like beating people's rates, right? That's the fun part in this market. Yeah.
Embrace the challenge, right?
Exactly. And now it's it's not as fun because there's not as many wins, but that's what we still want to do. So give it to me, let me try. Give me a shot.
Taking somebody from $9,000 a year to a $7,000 a year policy just doesn't feel as good as it used to be.
Yeah.
Saved them a fortune, and now they're like, well, I'll take this instead of this. It's like the lesser of two evils.
Yeah.
I see that a lot, actually.
Well, we've had so much wind damage, hurricane damage,
We've had a very eventful year this year.
Yeah.
But we've had that for a couple of years now.
Yeah, we're not through hurricane season yet.
I hope we are, but
Right.
no, the carriers have gotten a lot more picky too. So where they used to reinstate policies much more graciously, they'd say, "Oh, see, it's a statement of no loss," but now they'll do a lot more to get off the risk if they can. Even if it's a perfectly acceptable home, if a homeowner makes a mistake, they're like, "No, we're not going to take them back." There used to be a lot more grace in the underwriting side of that.
Yeah, and even the upfront underwriting, not just like reinstatements, but just upfront underwriting has gotten a lot pickier too.
Sure.
You know, there used to be, the most common thing we used to get with underwriting memos was, hey, trim back your tree limbs. Like that was the common thing that we would get. Now it's, you're not insuring the home for enough. You didn't include this in your cost estimator. Or on auto policies, who is this driver? Like it used to be real easy to get an auto policy and just insure the people you wanted to. Now these carriers are getting smart, running these reports in the background and just adding drivers that are in your household to your policy and then making you tell them to take them off. So it's,
That happened to me.
yep, it happened to me.
Me too.
My son,
Yeah.
Wow.
who's always had his driver's license and all his mail come to our house,
Mhm.
has his own condo, lives in Harris County, but he still showed as a driver on my policy, even though he had his own policy in Harris County, and I had to have him change his driver's license.
That was the indicator
Yep,
probably.
yep. And that situation is becoming very common actually, because
Wow.
most people, you know, when you go off to college, you still want your parents' home to be your home base, you know, because you don't know what's going to happen, you know, in your life yet. So
Exactly.
many kids have their address as their parents' address on their driver's license.
In
But
Indianapolis,
that-
that are, even up to when they're 25 or 26.
Yeah,
it's on their
sometimes.
license.
Right, and that's
Until,
his age.
until it really renews, you're probably going to have your license at your parents'
Yeah,
house.
Right.
and that didn't used to be an issue, but now it's becoming a problem because these carriers are running that address, and whoever has a driver's license with that address, you guys must, you know, be a family. So, or you'll find out what happened to me, and I had to move, and when I moved, the people who lived there before me never changed their address. And those people were automatically added to my policy because when
What?
they ran that address, they were like,
Oh,
oh,
wow.
this other family lives there too. And so, yeah, it took me about 2 months to get all those people off my policy because they would do it one at a time. Oh, we found this one. Okay, I don't know that person. Oh, we found this one. I don't know that person either. And finally, yeah, about 2 months later, I got it all fixed and my bill went back down to normal. But yeah, it happens to
Did
us
they
too.
credit you back for
They
it?
did, yes.
They, okay.
Yeah, they went all the way back to the date they added her and took her back on. Yeah.
So, like, I would say a majority of folks are on an automatic deduction plan where they're, you know, monthly drafted from a
Right.
Yeah.
routing an account number, so they might not even notice sometimes
Yeah.
that they're.
Until they notice that bill change, you know, and that's what happened to me until I saw, wait a minute, why is this $40 more than it was last month, you know? And that's when I was like, okay, let me take a look at my own policy, and I was like, oops, I missed that.
What are some of the things that consumers can do to be proactive to help keep their rates lower? Is there any guidance that you guys can give us there? Obviously, no speeding tickets.
Well, regarding home insurance primarily, I mean,
yeah,
auto insurance is not
home.
as volatile right now.
Okay.
Auto's particular, but it's not as volatile as home insurance. So I'd say on the home insurance side, the biggest factor probably, and the biggest premium bearing factor would be the age of your roof.
I'm sorry, the what?
The age of your roof.
The age of the roof.
So
Okay.
maintaining, you know, there's a certain element of maintaining a pride of ownership, and that'll keep you from getting canceled. But
Yeah.
as far as keeping your premiums low, keeping, you know, a newer roof is obviously going to have a lower premium than an older roof
Okay.
with most carriers. New roofs within 24 months or so are going to have a new roof discount.
Got it.
Okay, that's good to know.
Yeah, which is why whenever I'm looking at a listing online, I so appreciate if they put in the description, new roof, or the age of the roof, or hey, it was replaced in 2012, even if it's not new. You know, if you're giving me the age of the roof, oh, I love you, because
So-
you're making my job so much easier. Because that's a difficult thing to find out if you are someone purchasing the home. If no one's told you, you don't know anything about that
It's
new
on the
property.
seller's disclosure.
It can be, but not always, because I've
It's,
had
it's supposed to be.
Yeah.
Sometimes they put unknown.
yeah.
And a lot of times we find
Inspector will
out
pick
that
it up, right?
Well, the inspector will sometimes give you a, what do they call it? A
Life
useful,
expectancy
yeah,
or,
useful
or
life
effective
age.
age is typically what I see.
and
Yeah.
that's one of the biggest factors, like the biggest sources of heartache, I think, for us, is that the inspector for a home that's a residential inspector
Yes.
versus a insurance home inspector, those two hands don't talk. So a residential inspector may say, oh, this roof's great, it's 18 years old, it's got 4 years left.
Yeah.
And an insurance inspector is going to go, no way, this house is uninsurable because an 18-year-old roof is not insurable.
Wow.
I mean, there are a couple carriers who will do it. I mean, you're going to be looking at the Texas Fair Plan with an actual cash value roof.
Yeah.
Swift still does.
Which
some older
basically
roofs.
is no insurance on the roof.
There's most companies are going to an actual cash value model anyway. A lot of companies are going to a depreciated schedule. So if your roof gets to a certain age, after 5, 10 years old, it's going to start getting, you'll start getting less and less.
Yeah, a percentage of the coverage
For every
instead of
year.
the whole.
Yeah.
Right.
Does that make
Instead of
sense?
full replacement, now it's a depreciating,
Yes.
you know.
And
if
it's still subject to your deductible, so
Right.
that's why when you mentioned earlier, it's almost like no coverage, it can be close to that depending on how high your deductible is.
So,
Yeah.
if you started with a company that has a depreciating roof schedule, and you've been with them for 10 years, you might be shocked to find out that, your roof is 5 years old, now it's 15 years old, and now you're gonna get $2,000 after your deductible for a $20,000 roof. So there are a lot of people that kind of get blindsided by that.
Yeah.
Yeah, we had a leak in our roof from the last storm, and our roof is, I don't know, 5 to 7 years, 5, 6 years old. We had Richard's recommendation roofer come out and look at it, and he said, your roof's great, there's nothing wrong with it, except everything it wasn't sealed correctly. You need to reseal around the whirlybirds.
flashing or whatever.
And so he had his guys come in and reseal everything, but we ended up with a leak that came through just because of the strong wind and the way the rain
Wind,
hit.
yeah.
And we ended up just paying out of pocket to have it re-sheetrocked, re-insulated.
Was it because it was under deductible?
Exactly. By the
Okay,
time you
yeah.
pay deductible, then your insurance is going
And
to
you have a
go
claim.
up. You have a
Right.
claim. We just paid it.
Yeah.
Yeah.
There is one insurance company right now, actually, that is, they've offered this resealing technology. So
Okay.
they, I guess when when the roof is first put on, sometimes that glue doesn't actually adhere. So if you go up there with a blower, you'll see some shingles actually flapping, even on a brand new roof, because not all of those shingles
Yeah, it didn't stick
adhere.
perfectly.
Because I
Yeah.
guess you peel off of maybe, or there's some type of adhesive on every architectural shingle. And so as they lay and the sun heats it up, they're supposed to naturally adhere to the roof, right?
Right.
So what they are doing is they're going out and inspecting roofs, and if you actually buy into their resealing program, they will go out there with the caulking and reseal every single shingle that's actually done it. And they will warranty the roof, not warranty the roof, but they will honor replacement costs on the roof for an extended period of time.
For a longer time. Yeah.
So if you do the resealing program with them, they may offer you an extra 10 years of
Wow.
Replacement costs.
Wow.
Yeah.
What's
Oh,
the
that's
cost?
huge.
And do they come out every year and
No, they won't. It's a one-time resealing, and the roof will actually. It's actually the cost is relatively low to the consumer. I think a lot of that cost is getting passed on to the carrier as in this trial period that they're doing. We're still in the first year of it.
I've never heard of this. This is all new to me.
And it's actually SageSure is the company that's offering this and pioneering this, and they are. I think the cost is around $400 to the consumer. And I think
that's
it's
very
added
expensive.
to the total premium. And then they actually come out, they'll inspect and do it, and then you're good for us. I have to look at the guidelines.
Yeah,
but
I don't
it's-
remember
it's-
exactly.
It's up to, I think even up to 20 plus years.
Depending on the type of shingle too. It has to be I think the architectural shingle, they give you
First
more.
composition.
Yeah.
So
Oh, that's great
and I
advice.
can send some more information out on that. People
Okay.
want to know about that.
Is there anything you recommend on the roofs what type of shingles you should be getting that you guys are seeing with the insurance companies like better than others?
So I hear about roofers coming out and offering different tiers of quality of shingle, type 1, 2, 3, 4, what I don't even know.
The wind rating
Wind rating
for
and stuff
shingle
like that.
sometimes changes.
But honestly, from an insurance company's perspective, there is a discount for architectural shingle over composition shingle. You don't, a lot of companies won't take like a rolled roof, which I'm not even really too familiar with that technology.
Yeah.
But it's
what?
like a
Rolled.
rolled roof, I think it comes in like a carpet type of with a
Yeah.
bolt and it rolls out on top.
Hmm.
It's like one giant shingle instead of
Wow.
a bunch of shingles.
I've seen metal roofs, the tile roofs.
Yeah.
I heard those are real heavy though.
The tile roofs, yes, you have to have reinforced for the load bearing.
Sure. So yeah, architectural shingles give a little bit of a better discount than comp shingles, but as far as the different rating factors, they're not going to make a difference. in
It's not
rating
gonna make a huge-
assumptions.
Well maintained.
A new roof is a new roof. to the
Okay.
insurance company.
Architectural is typically the 30-year shingle, which is the narrow ones, and the composition, is that the wide ones?
The architecturals have an overlap. Like they'll have a
They
pattern
have some
of overlap.
texture,
They have
yeah.
some-
Okay.
And the comp shingles are laid a little bit more flat. Right?
Yeah. Yeah, it almost looks like wallpaper when you look at it. Right where one shingle ends, the other one starts, and it's like a flat sheet over
Yeah,
there.
and architectural will have some dimension to it. and
Yeah.
overlay.
I'm going to invite Priscilla and Select Title because we're using her beautiful office and her amazing system.
Yes.
So Kudos, this has been awesome, and thanks again, Richard.
I kept saying
And
no.
Rick and
I kept
Jessica.
telling her no.
But look how
No.
beautiful, she's so beautiful.
No, he did.
Yeah.
Yeah, so funny. Thank you. My question to y'all is, okay, if Richard's going to get a new listing, and is there any insurance that the seller has that could possibly, the buyer could get a better rate if the seller kept it in place and they could just assume it?
Flood
You know the
insurance.
answer to this
Yeah.
question. Go ahead.
Home insurance, I can't think of any carrier that would let you assume another's home policy. But with flood insurance, if they already have a policy in place, the seller, and especially if it's something that they've had in place for several years, it's going to be easier, cheaper for the buyer to assume that policy and just have that seller assign that policy over to them, because one, they get to keep the term dates. So if the policy started in January, but they're buying the home in August, now they don't have to pay for flood insurance until January again, when it comes up for.
Because they're grandfathered in.
Because they're taking over that same policy. So
Okay.
we're not starting new dates. So there's not an upfront cost there for the buyer. And then the other thing is the grandfathering. So if
Okay.
they've already been on this policy for years and years and they've got like a special rate for that zone, especially if the flood zones have changed, it's going to be cheaper for them to take over that policy
That's a
than
really
to
good-
start a
Yeah.
new policy.
And a lot of that has to do with FEMA came out with a new pricing model about 4 years ago, in 2021, wasn't it? Or
Yeah, 22.
2021.
Yeah, my flood insurance has raised over the years.
So they went to what they call 2.0 pricing model, and so when that changed, it threw away all those $456.
That's what I had forever.
Yes.
That was
Yes.
great.
Yes, yes.
I missed that.
Oh, wow.
That was the preferred package, yeah.
Good,
When
so
you were
those-
not in a flood zone, you could just look at this chart and pick your rate and let's go, yeah.
So,
Not anymore.
and enter all the private flood markets that, they hand select what they want, right? So
Right.
you get private flood companies that it's just as good a flood policy as a FEMA-backed policy. People get a little bit concerned. They have some apprehension about the private flood markets, but it's just, the difference is that it's, a name brand carrier will come in and offer flood insurance. So it's not backed by FEMA, but it's still a decent flood policy, but they're very
Still an
select.
A-rated company, or?
Yeah, absolutely.
Okay.
So, right, all the major flood carriers will have a private option typically.
Yeah.
They'll offer an NFIP, National Flood Insurance Program flood policy, or a private flood policy. But they're very selective, right? They want just the best of the best. And
Yeah,
they'll
the
give
easy
a really
stuff.
Great
Yeah.
rate to something that's, in an X zone that's never flooded, but they'll be a little more selective in some of that more flood prone areas.
Now, is that still 100,000 for contents and 250 for the improvement or building?
Is the max, isn't that on the FEMA
On a
flood?
FEMA flood, correct.
Right.
That's what a max, but now without the post 2.0, it's very customizable. It
Yeah.
used to be you'd get what you get, and it was $456, right?
Yeah.
Right, okay.
Now it's, it could be in Katy, it could be $700 or $800,
Mine's 740.
and in the next zone in Pasadena, it could be $1,200.
Yeah.
I mean, if it's in the next zone, the 500-year floodplain.
And if you had I guess again, it would follow the map of the zone, but if you had a subdivision that flooded during Harvey and then, of course, never flooded again, chances are it won't happen again in our lifetime. Would they still be, you would still follow that map as to how they're gonna, the back of the subdivision actually might be in the flood zone and the front not, right?
There are some
Yes.
neighborhoods like that.
Yeah.
Well, a lot of
That could be
neighborhoods
mine,
that are built out
actually.
here, like that conversation in the email that we had going on earlier this week, when the land was bought by the developer, it was in the flood zone, but they developed it, raised it up, and so now she had to drop her flood insurance, or wanted to, because she's no longer in a flood zone. But I was trying to chase that map, which I had no idea what they were asking for, so thank you, kudos to you guys.
So where I live in Sugar Land is a neighborhood called Greatwood, and it's right on the Brazos River.
Very
so
pretty.
Where we have a levee system that's actually allowed us, it's insulated us and protected us, 4,000 homeowners from having, required $1,200 to $1,500 flood policies.
Oh, wow.
So now we are actually, because of the levee, we're in a 500-year floodplain.
Okay.
And so nobody's required to have it, but it's still, probably a good idea.
Oh, I don't know.
Oh, very good
Yeah.
idea,
Yeah.
very good idea.
Very good
Yeah,
idea.
the way they do that, the 500-year floodplain is the chances of your home flooding in a once in a 500-year event, right? So that's why they call it a 500-year floodplain. So you have a lot less likely
100 years,
So
yeah.
Right.
That's the higher risk area. That's what they would refer to as like an AE zone or a V zone. You've probably heard those when you're going to get
Yeah.
lots of documents together.
I know it.
Those are the required zones, the zones that
Mhm.
usually lenders require you to carry flood
The
insurance.
insurance, yeah.
And a lot of realtors will call us and be like, they'll be out in the field and they'll be in a house looking at it and they won't know if it's in a flood zone or not. And the customer will be like, hey, is this in a flood zone? And they'll call us real quick or text us and be like, hey, can you just on the fly? And we're like, hey, yeah, this house is not in a flood zone. They're like, oh, awesome. So that's where we add a lot of value for realtors.
Sure.
That's awesome. That's
Mhm.
super helpful.
Well, and
Yeah.
FEMA can change their maps at any time, correct?
Yes, they change them all the time, actually. Sometimes, and that's why I was mentioning earlier with someone assuming a flood policy, if the flood zone changed from the time they bought the policy to the time that they were selling the home, the new buyer is going to have to get new insurance in the new zone, which can sometimes be more expensive. Not always, because the zone could go the other way too. But if that's the case, that's always a huge advantage to go ahead and assume that flood policy
Yeah.
because A, you don't have to pay for it, and B, you get to continue to renew that grandfather rate instead of getting that new rate, which we could show you a lot of times. Like,
Wow.
here's the quote that we could write today, but if that seller already has flood insurance, we recommend that all the time. Just check with the seller and see what they have.
I feel like you
Yeah.
can liken flood insurance to like an amortization on a life insurance table. Like if you buy it when you're 15 or when you're 25,
Yeah, yeah.
it's going to be cheaper for 30
yeah,
years.
yeah.
That's a good way
If
to
you buy it when
look
you're
at
40,
it,
you're like,
yes.
oh my god.
Yeah.
So if you can assume that person's policy that you bought when you're 25,
I like that.
you're going to have a lot better
Right.
experience.
Yeah,
Mhm.
yeah.
I like that.
Yeah.
That's
Think
good.
about it like that.
Yeah, it's the same thing with what continued health care. It's funny, I was talking to the Medicare guy yesterday, Adam, and he was telling me the same thing. You know, if you bought long-term health care when you were 50 instead of 60,
Mhm.
you know, it'd be half the price.
Half the
But the
price.
longer you wait,
The
the
more-
more
The more it
expensive it
is.
gets.
Yes.
Right.
Yes. Wow.
Yeah, kind of the same concept, yeah. Buy it now, it's a lot cheaper, and then when you need it, you got it.
So I want to go back because I was, listening to y'all and all the conversation. And the roof, I'm like, all that stuff is really, that's a lot of information, good information for us to know. But, to the consumers, I mean, okay, Cinco Ranch area, how old is this area? And there's a lot of roofs that are probably over 20 years old.
They've been building Cinco Ranch for 25 years.
Right.
There's 25,000 homes in Cinco Ranch.
Is Cinco kind of in like a 4-quadrant, like
It's huge.
divided by I-10 and 99, and it's like you got newer, old, and older.
I don't think
No, it
crosses
doesn't
over
go
10. It
over
doesn't-
10.
No.
It
No.
stays on this side.
Yeah.
Mm-hmm.
It's in between 10 and 1093. It starts at Fry Road
Mm-hmm.
and goes west almost all the way
Almost
to
to
Fulshear.
All the way
Spring.
to, yeah.
To Spring Green, right?
And then you get
No, it goes to 1463.
Okay.
And then what is it?
Oh,
next?
wow,
Is it
that's
Port
that
Ellison?
far.
Is Ellison the next neighborhood up?
Ellison's
Ellison's
north of
way-
10,
yeah,
but
that's-
that is a Newland developed community. Newland developed Cinco Ranch, and when they finished out, they jumped over and started Ellison, and
Yeah.
then that actually just sold out to Brookfield. Brookfield's the new developer.
Okay.
They took over from Newland. So Ellison is the new Cinco Ranch.
Yeah. So to your point,
Okay.
Cinco's probably, a lot of it is probably doing there's a lot of roof turnover.
Mhm.
Refreshing going on right
Yeah.
now in Cinco.
So is
Just 'cause of
it
timing,
something
age.
that, you need to, okay, my insurance is going, if I have wind or any kind of damage on the roof, I don't have that much coverage for it, so I need to look at going ahead and replacing so that I do have coverage.
If you can, and in the roof, it's time to replace the roof, that's one of the things that helps your rate the most. And to what I was saying earlier, availability, right? If you have a new roof, I have more options than if you don't have a new roof.
For how long? What is that period, like first 5 years of a new roof?
The first 2 years is when you can get a discount.
Okay.
But yeah, 5 years or newer, I can usually get you a better rate than 15
Okay.
or older.
Okay.
Yeah.
Yeah, for sure.
And better coverage. You'll get replacement
It's
costs.
incremental.
And
So you're going to see 2024 being a year where a lot of people have
new roofs, yeah.
So
Because of the
in 5 to 10
hurricane,
years, you're
yeah,
going to see
the
seller's
wind.
disclosures with new roof in 24. Probably.
Yeah.
Yeah.
And I feel like it's becoming more common to see people replace their own roofs for that reason. Like I'm seeing a lot of people like,
We did.
can you reshop my policy? I just got a new roof, even if it's not time
So
to
they're being
reshop.
proactive. Most people, the roofs wore out, the ACs wore out before they do anything. I mean, it's just
Right.
typical
They were
how it's always been,
reactive.
because it's
Right,
the most
yeah.
expensive thing that the homeowner has to repair or maintain.
Right.
Yeah, I would say people are probably doing the rain dance when they know they need a new roof, right? They're out
Or
there
you could be
hoping
me
for
and
help.
have
Like our roofers are, yes.
and sitting in your den and filling water. First, I sat in the chair and thought, "Did my puppy dog go to the bathroom in the chair?" No way. That's the first thing that went through my head. We'd never do that. Why am I soaking wet? And I look up, and and all of a sudden I feel drip. Oh no! Oh, and it was started as maybe a quarter to.
Yeah.
It got
It
to
doesn't
2
take
feet by
long.
2 feet.
Water makes
in.
damage fast, yeah.
Fast.
This was
So it was
during-
just sealing.
This was during the Merle.
Yes.
Oh.
Yeah. Oh yeah.
It's a tough time to find out that you need a new roof is when it's raining.
Yeah.
Yes.
But she had a new roof. It was just.
Oh yeah, the
leaks.
roofer,
It was
Richard's
that
roofer came
sealant.
out and looked at it and said it's just sealant. We just need to go in and seal, but of course,
Yeah.
you gotta take all the insulation out, all the
Yeah.
sheet rock.
And that happened before the storm. You got it looked at before the storm.
It happened during the
During the
storm.
on Monday
After.
morning during the storm. I was putting on my shoes thinking, that wasn't so bad going to work. And then, holy crud, what happened?
Mhm, mhm.
Oh my gosh.
If consumers have questions or would like to shop policies or would like some advice from you, what is the best way for them to connect with you guys?
I'm best by email, but our phone number, 281-715-7800. We're always at the office. Someone will always
Always.
answer the phone, yeah.
Awesome.
Email, we're very responsive, so either my email or Rick's emails. I'm Jay Fuentes at Brazos INS. He's our Chester at Brazos INS. And our website, brazosins.com.
And can I give a huge shout out testimonial to you guys? So I've worked with Rick and Jessica for, I think, since about 2009. And
So my daughter was
being
born.
in the mortgage industry, we talk to a lot of, and we're not in the insurance business, right? But for our customer, we're talking to a lot of insurance companies. And Rick and his team are amazing. They answer their phones. I've had a customer who bought in Rockport, and 3 weeks after they purchased, the storm hit and trashed their home. And Rick was so involved and really talking to through the flood insurance, fighting for them, working with them. You just don't find that. And we love you guys. And y'all just do their customer service. I can't find anybody that beats the value for the price. And y'all are just amazing.
Thank you.
Thank
We
you
love
so much.
y'all.
We
So,
appreciate
and
it.
we've worked with them again since '09, and they're really, if a customer asks, they're our go-to guys. Because you
Awesome.
just do such a great job for the consumers, so thank you.
Thank you.
So give them a shout, I promise you won't be disappointed.
So call Brazos Insurance Agency. Again, your phone, the best number to reach you guys is
281-715-7800.
perfect. Yep.
A
reach out.
new location coming soon.
We are. We're
Yes.
moving.
Uh-oh.
Mhm.
We're
Yeah.
moving right in between Constellation Field and the new brewery that's right there.
Oh, that's exciting.
In the Imperial area of Sugarland. So,
Congratulations.
Across from the airport there.
right across from the airport. So,
That's awesome, yeah.
Which is really down the street from where we are, so
Down the
we're not far.
And I love it, it's right there where you pull right up to the front door,
Yeah.
right? So it's kind of like my office, you just
Yes.
pull
We'll,
right
we'll
up.
be in a condo complex. Like
Yeah.
a condo,
Okay, yeah.
business
The
condo.
little mini office.
Yeah.
That's awesome.
Yeah.
Awesome.
So thank you for coming out today and
Thank you for
sharing
having us.
knowledge for the consumer and doing this.
All right.
Means
Thanks,
a lot.
guys.
Don't forget about the school drive.
Yeah.
Yep. If you would, please support the school drive. There's a nice little QR code. If you go to our Facebook page, it's click and order. All you got to do is click on the Amazon link, and it's $14.99 is where it starts at. We greatly appreciate all the help and support, and we'll see you next week, folks.
Thank you.
All right. Thanks.